Did you know that an expert revealed that now is the best time to buy Tesla stock? These days appear to be a confusing time for the Tesla community in general. Investors are on edge as to whether they should sell their shares, while others believe that buying Tesla stock at a lower price is the best thing they could do now. Watch till the end to find out why. It is a known fact that Tesla is extremely volatile, but so are other stocks. Even in 2021, when Tesla stock was following a downward trend, an investor said, "Anytime you get the chance to buy it, as Tesla stock dipped at the time. In June 2021, the managing director of Vios Advisors at Rockefeller Capital Management, Michael Bappas, told CNBC that Tesla's roughly 24% market share at the time and ambitions in the electric vehicle, space, and clean energy markets make it a name worth watching. Tesla is going to continue to be the leader in the industry, especially for the foreseeable future," Bappas said on Trading Nation. "When you think Tesla, you think innovation." Today, Tesla stock is once again experiencing a dip after the company recently released production and delivery numbers that fell below Wall Street's expectations. However, some experts claim that now, while the stock price is cheaper, is the best time to buy Tesla stock. In fact, star investor and known Tesla bull Cathie Wood and her firm ARK Invest bought Tesla shares twice in October. Once after the EV company released delivery and production numbers in early October, and another after the company's Q3 earnings call. Barron's recently released an article titled "Good News for Tesla Investors. The stock is now oversold." Barron's is an American weekly magazine newspaper published by Dow Jones & Company. According to the article, though, Tesla shares have gone through just a brutal stretch lately, which has been painful for the bulls. They might be getting some relief soon. Jordan Peterson, a Canadian clinical psychologist, media personality, author, and professor emeritus at the University of Toronto, said, "Purchase an electric car if you want one, but no diesel-powered emergency backup vehicle or electric power generator for you. Buy some stock in Tesla. That's probably the best bet on that front." Tesla is arguably one of the most innovative companies in the world. The business is growing rapidly as consumers look to electric vehicles to offset rising gas prices. In the second quarter, Tesla announced that it delivered 254,695 electric vehicles globally in the second quarter. That fell 18% from the previous quarter and missed fact-set estimates of 264,000. The slowdown was partly due to an extended coronavirus shutdown in China. Constraints around opening manufacturing facilities in Austin and Berlin took their toll too, but the deliveries were up 26.5% from the year-ago period. Although Q2 proved to be a challenging quarter for Tesla, the company appears to be on top of things, all things considered. Global supply chain issues and rising raw material costs greatly impacted production, even at the new gigafactories. Production at its Shanghai factory, as well as consumer demand, was hindered by lockdowns as China continued to implement its zero-COVID policy. Despite that, Tesla grew second quarter sales by 42% year-over-year and generated $621 million in free cash flow. Moreover, Musk said the Tesla semi-truck would begin deliveries as soon as this year, and the Tesla Cybertruck should still be on track to launch next year too. During Tesla's annual shareholders meeting in August, Tesla's CEO Elon Musk stated that Tesla's strongest competitive advantage may be manufacturing efficiency. However, he also said one of Tesla's greatest long-term opportunities may lie in robotics powered by artificial intelligence. Moreover, Musk says Tesla could achieve a production run rate of 2 million vehicles by the end of this year, and he reiterated the goal of 20 million vehicles by the end of the decade. For most, Tesla might seem like a pricey stock in terms of valuation, but the company has delivered huge earnings and revenue growth for several quarters in a row. Also, annual earnings estimates show the company's growth trajectory is still very much intact. In the third quarter, Tesla reported production of over 365,000 vehicles and delivered over 343,000 vehicles. According to Tesla, it is becoming increasingly challenging to secure vehicle transportation capacity at a reasonable cost as production volumes continue to grow. Tesla explained that in Q3, the company began transitioning to a more even regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. Tesla reported Q3 2022 earnings of $1.05 versus 99 cents per share, adjusted expected, based on analyst polled by Refinitiv, and revenue of $21.45 billion versus $21.96 billion expected per Refinitiv. Tesla's net income GAAP for Q3 2022 reached $3.33 billion, with automotive gross margins holding steady at 27.9%, exactly where it stood in the second quarter of 2022. During the same period last year, Tesla reported $1.62 billion in profits. The automaker had an operating free cash flow of $3.3 billion last quarter and increased its cash balance to a record $21 billion. Experts believe that the future looks bright for Tesla. While a PE above 70 is an extremely high valuation, if the company continues to grow at or near 50% for several more years, that won't seem so rich. For investors looking years or decades down the road, buying Tesla right now could make good sense. After all, most analysts believe that Tesla stock is more suited for long-term investors rather than short-term investors. That said, looking over the long term, bullish investors place their hopes on fully autonomous vehicles. While dozens of companies are working toward that end in one way or another, Tesla's lead is difficult to surmount. Tesla's use of cameras, radar, and GPS has been advancing for years, to the point that Tesla vehicles are practically self-driving. According to Goldman Sachs, Tesla stock is a big buy. In March, Goldman Sachs picked Tesla and several other EV-related stocks to play a greenflation trend and rising oil prices. The bank's analysts give most of the stocks a 50% potential upside or more. In fact, according to Goldman Sachs, electric vehicle innovation will continue to drive growth for investors in 2022. Goldman Sachs analyst Mark Delaney believes there is more upside to Tesla despite the stock's rise. Delaney's take comes after a meeting with Tesla's head of investor relations, Martin Vicha. In line with that, Delaney set a price target of $333.33 with a reiterated buy rating and assumed a plus 22% stock price movement. Even Emmanuel Rosner, a Deutsche Bank research analyst, was more bullish on Tesla overall. The firm views Tesla as one of the most attractive stories in the auto sector. While investors shouldn't obsess about a company's progress over just a 3-month period, they still watch quarterly results as they help detect trends that can confirm or refute what stock analysts have been saying about a business's prospects. That said, some investors have worried about demand destruction as EV competition swells globally. Still, business remains robust for Tesla. In fact, in the previously mentioned Q3 earnings call for investors, Tesla CEO Elon Musk stated, "I can't emphasize enough, we have excellent demand for Q4, and we expect to sell every car that we make for as far in the future as we can see." That's exactly why the company has spent billions to build its 2 new manufacturing facilities in Texas and Germany, as well as upgrading its Shanghai plant. The China plant can now produce 1.1 million vehicles annually at full capacity. It closed in on that run rate with a monthly record 83,135 units in September. The company has also said its energy division, which includes battery storage and solar rooftops, has more demand than it can supply. Sales from that division represented 5% of total revenue in the third quarter. Tesla is undeniably performing well, although it faces supply chain and logistics headwinds. The company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Customers will take ownership of those vehicles in the fourth quarter. That issue could cause 2022 deliveries to miss the company's 50% annual growth target, but it does expect production to still hit that level of growth. Despite this, investors wonder if the stock is valued appropriately. Its trailing 12-month price-to-earnings ratio remains above 60 even as net income has accelerated this year. If the multi-year 50% annual growth level holds, however, that PE will decline relatively quickly. Still, experts believe that investors shouldn't count on any stock to guarantee a certain return over just 1 or 2 years. There are numerous factors like the current supply chain risks. Elon Musk, although most known for being a controversial leader, has also been aggressive with his predictions. The Tesla semi-truck was first announced nearly 5 years ago and is now set to begin deliveries next month. Tesla shares could go lower even after it is down nearly 50% from their highs. But with its promising growth path ahead, long-term investors might want to take advantage of that decline and buy some Tesla stock now. Subscribe to this channel and have the best time watching.